Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, global markets reporter at Nasdaq. We're coming to you live from Barcelona at SmartCon 2023 by Chainlink. Joining me for this segment, I have Alexandre Kech, head of digital securities and executive board member at SIX Digital Exchange, known as SDX. We're going to talk about the adoption of blockchain technology and some possible solutions it is trying to solve for in the institutional space. Tell us about SDX and the Swiss developments in the CBDC space.
So SDX is part of the SIX group, which is the exchange group for Switzerland and Spain. And the company has two business lines, one focusing on native issuance of securities on blockchain and tokenization of existing securities on blockchain, an exchange and a CSD, that's what I'm taking care of. And then we have a crypto service or Web3 services where it's all about custody of cryptocurrencies, staking and liquidity access. On your second question, which is about CBDC, so the recent development in Switzerland is that the Swiss National Bank has decided to launch a live usage of Swiss franc CBDC using SDX as a platform for the settlement of primary issuance of bonds. That will be happening in the coming 6 months to 9 months. It is a change, obviously, because today it was only experiments. Here we have live production transactions.
Alexandre, what do you see as the main challenge for the institutional adoption of blockchain?
I think it's threefold. It's the legacy tech that banks are using today and needs to evolve into something that is blockchainy, if you wish. And also operationally, when you operate on blockchain and you start to implement processes like atomic settlement, for example, being able to make liquidity available for pre-funding, for example, can be a challenge. So solutions are being thought about to tackle those challenges, but it is clearly a multi-year evolution.
Let's talk about that. What are some of the potential solutions to solve for that problem?
Well, pre-funding as such requires finance to be available or liquidity to be available at the time of settlement or the time of trading. So you could imagine financing solutions such through repo transactions or automatic lending and borrowing of stocks when you don't have those stocks for trading and settlement in atomic form. We can also imagine having a netted atomic in the sense of you don't necessarily settle everything instantly, but you also you do that every 10 minutes, maybe for grouping of transactions. So all those things are being thought about at this stage.
How does SDX view the Web3 ecosystem?
Well, we consider ourselves as being in the Web3 ecosystem already with our public chain services that we have. And the reason why we have our infrastructure on private chain and our public offering on public chain is because we believe those two worlds will ultimately be together. And therefore we need to really learn from the Web3 innovation that exists on Ethereum, for example, in terms of how services are organized with AMMs, with liquidity pools, and see how we can transpose it into the more traditional capital markets structure.
That seems to be a key theme here at SmartCon, talking about, it's more, the future's integration, not necessarily one replacing the other, because TradFi, you have existing businesses that run, right? So it seems to be integration is really what they're talking about here. Absolutely.
So clearly Web 2 and Web 3, let's call it this way, will be merging in the future. One will not replace necessarily the other. The Web 2 platforms or trading or banks or financial infrastructures like SDX and SIX will evolve towards that new paradigm on how you store value and exchange value. It's going to be a long trip, a long journey, especially for the traditional markets to reach that blockchain global digital asset agnostic infrastructure that we all dreaming of, but it's the direction of travel.
All right, Alexandre, we appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me from Barcelona. I'm Jill Malandrino, global markets reporter at Nasdaq.